Shares in Shanghai and Hong Kong each fell 2.2%. Sydney dropped 2.1%, while Japanese markets remain closed for a public holiday. An update on what is happening in markets in Singapore. Shares entered bear market territory with the STI down 23 points to 2,846 points. For more on-market action, I have on the line Andy Yu, a remisier at Phillips Securities. Andy, Singapore stocks were in the red. What contributed to the negative sentiment?
Hi, good evening, Michelle. Shenzhen Index closed 22 points lower today at 2,845. Right now, we are 20% down from the high in April this year. Technically speaking, correction with more than 20% is considered a bear market in the longer term. In the shorter term, overall sentiment of Asian market was weak following Dow Jones close 180 points lower last night. And global market has been weak since last week as Federal Reserve Chairman Janet Yellen announced that there's no interest rate hike due to their concern of global economies and lack of inflation. Overall, it is a good news to the market as there's no interest rate hike in September, but market react in a bearish way without much reason. This seems to tell us that investors are trying to get out of the market earlier before the coming interest rate hike.
Andy, another dampener to investors' confidence has been the impending interest rate hike. What is your view on this and where it could go?
I think the interest rate hike is going to come soon, and although we don't have the interest rate hike in September, but however, there's still a high chance that Fed will rise the interest rate this year, with 13 out of 17 members committees predicting that the FOMC will rise rates by at least 0.25 percentage point. And the last time Federal Reserve did a rate hike is in 2006. Hence, I believe that there's a high chance for Fed rate to rise the rate in October meeting.
Now, which sectors or stocks are you looking at right now, Andy?
Okay, although right now it's not the market is not as bullish as last year, but however, we still like to stay with this stronger sector. In 2 weeks ago, we talked about Raffles Medical Group being a strong stock in a weak market on 938 Life. And right now, the stock is still holding well in that price range. This week, we are paying attention to healthcare sector. And another stock we are watching is Cod Life. This stock has been outperforming STI for the past 3 months and has been up more than 25% since July. We like to stay with stocks that is stronger than the market.
Thank you for joining us. Andy Yu, a remisier at Phillips Securities.